Hey guys, good evening. Good evening. It's your girl Folasade, the accountability accountant, guys, and I'm so excited and so blessed to be with you guys on this beautiful, kind of almost wintry but fall Tuesday, guys. So if you are new to any of my videos, I'm Folasade, the accountability accountant. I help individuals and small business owners save money on taxes, build profitable, scalable, and sustainable businesses so you guys can in turn build generational wealth. So on today's show, guys, we are having in my terminology, action-packed Tuesday, guys. So on segment one, we're going to talk about the rising auto loan debt, and we're going to talk about some strategies on for you. We're going to talk about some strategies for you guys to get rid of the loan or to prevent your car from being repossessed. If you know any of my story, I have experienced repossession, okay, of my Mercedes, and it's okay. So we're going to talk about that. And then in segment two, we're going to do a deep dive into this British Williams, the reality TV star. We're going to do a deep dive into her fraud claims, guys. And it's extremely interesting. It's actually relative to what's happening right now with the rapid PPP fraud, tax fraud. So I'm excited to dive into that because I have a lot of content. I think just my improvisations throughout this, you guys will learn a lot from her situation. Okay, so we about to get right into it because I was already running a bit behind. I think I'm gonna move the Instagram back just a little bit. I feel like y'all like real close. Yeah, I feel like y'all like real close to my face. Okay, so we about to get started, guys. So first things first. I don't know if you guys watched my video. I cannot recall when I did the video. It's some months. I did a video when I discussed about the amount of debt that we hold in the US, right? So I have walked you guys through on how to pull up the tax debt, and I broke it down during that live stream. What was it? Credit card debt, auto loan debt, student loan debt, and everything. I didn't even think to even pull that up for you guys today, but I might be able to find it. But during that live stream, we walked through it all. So just if you want to catch that replay, head to my YouTube channel, guys. And I think if you search debt, it might come up, right? Okay. But on tonight's show, we're going to talk about the increase is the surge of repossessions that's happening. So first things first, I'm going to share my screen of this CNBC article. So if you guys are Instagram and you want to see my screen, head over to my YouTube channel, which is Folasade TV. So you can view my screen. I wish I could share you guys this on Instagram and multicast easily, but I cannot. So bear with me. But if you want to see my screen, head over to my YouTube channel, which is Folasade TV. So today's topic is about segment one topic is auto loan debt. And let's really be honest, guys. A lot of you don't want to be in the Black community. We really don't talk about money, so that's problem number one. If we discussed money a bit more often and made it common for us to talk about our failures, our mistakes, then we can really teach and educate people because I'm a big advocate of teaching from experience. Like that's why I talk to you guys about my personal experience. Like I don't tell you guys experience off everybody else only. I also talk about my personal experience. And that's where I find like I make the most impact by being transparent. So if you had a family member, if we were more comfortable in the Black community talking about finances, and you had a family member that experienced a car repossession and gave you the strategy on how to prevent your car from being repossessed, then you will probably be better off. So the first thing that I need us to start doing right now, guys, times are getting too tough for us to just brush this under the rug. So I think it's best now for us to start having these money conversations, okay? So let me go ahead and show this article. All right, so the article says why Americans are struggling with car loans. Okay, so it says there are more than 27.5 million cars. So remember, guys, I do wear glasses. but it's bringing a glare when I do live streams right now, so I cannot wear them. So just bear with me. There are more than 27.5 million cars on the road today. But in the recent years, car ownership has gotten more expensive than ever due to the COVID-19 pandemic, supply chain issues, stubborn inflation, and the Federal Reserve's interest rates hike. Outside of purchasing your first home, a new car is the second largest purchase. So let's stop there. Outside of your home, okay, purchasing a vehicle is your second largest purchase of your lifetime. So you're going to go buy the house or buy the car first and then buy the house, however way you do it. But the bulk amount, the amount of debt is your highest. Okay. And so when you are investing into large purchases, you're supposed to think not only once, not only twice, but 3 times. Oh, do I really need this? Oh, well, do I really need this vehicle? Okay. Can I afford this vehicle? Okay, well, can I afford the insurance on this vehicle, guys? There's so many layers to purchasing a vehicle and purchasing a home that you guys probably did not actually take into consideration. And I'm going to be honest with you guys. I didn't eat, well, I did take it into consideration, but I really didn't. Like, I wanted the car because my Dodge had got crashed, totaled, and I was like, well, my Dodge Charger was already paid off. I'm like, okay, well, if I'm going to get a car note, then I'm going to get whatever I want, right? And that's what I proceeded to do. That was my only thought process. Don't do what I did, and I hope you didn't do the same thing. Okay, do not do that. What you want to do is just make sure that that is within your budget. I came from a Dodge to a Mercedes. Like, is that the same budget? Hell no, right? So that's something to really consider. Don't just jump. It's like levels to luxury, guys. And I jumped. But yeah, we're here. So let me go back and share the screen and finish reading, guys. All right, so it says outside of purchasing your first home, a new car is the second largest purchase for most people, actually, a majority of everybody. Okay. It says more than 100 million Americans have a car loan. 100 million Americans. But didn't they say only 27.5 million cars on the road? Hold up. Wait. Let me go back. Did they just say? Yes. Okay. Okay, they say it's more. Or is that 275 million? Okay, I'm really going to have my glasses, guys. I think that's 275 million. Okay, that has to be. Okay. I was about to say, that means y'all just sitting on credit card, student car loan debt? Like, okay. They says 275 million cars on the road and 100 million Americans have car loans, okay? And it says the auto loan debt in the US currently stands at $1.5 trillion. $1.5 trillion, guys. That's a lot. $1.5 trillion. Okay, it says in 2023, the average monthly loan payment for a new vehicle is $725, up from $650 in 2022, according to Experian. The average monthly payment for used vehicles is $516 in 2023, up by 2% from 2022. It says outstanding balances continue to grow. Consumers are still originating auto loans, said Melanie. The volume is a little lower, but the loan amounts are certainly higher. So they're basically saying that you guys are getting more of like luxury vehicles, kind of, or getting more high priced vehicles. So I'm about to stop sharing the article, guys, and we're about to do a deep dive into what's happening right now. Okay. Alrighty. So this says 275 million vehicles on the road and over 100 million car loans. And the amount that they said, I think they said it's 2.2 million. I'm about to share my screen on that. 2.2 million cars got repossessed in 2023. And that's more than what was repossessed in 2022. So problem number one, guys, I think we're being impulsive because even as straight minded or as disciplined financially as I am, I still get a bit impulsive. Not lately, thank God. But earlier during my more disciplined, when I was my discipline was being challenged, finally making some coins, you're like, oh, so we end up making a few impulse buys. So step number one, guys, when you are making any major purchases, your house, investments, cars, even bags nowadays, please, number one, see if it's what you really want and also what you really need. And then the reason why I say it's want and need, because number one, if you need a vehicle, you have to get a vehicle to get back and forth to work or to make money. But if you also want it on top of needing, it kind of excites you to pay for the car, because the last thing you want to do is pay for a car note that you don't like. So if you're gonna have a car note, stay within your budget, but make sure it's something that you want so you can be encouraged to continuously make the payments. So number one, don't impulsively buy any vehicles, used or new. Okay, if you can hold out, hold out. The second thing that I need you guys to do, if you are behind on your car payment, or you're going to fall behind, if I were you, I will call your lender. If you know you're going to fall behind, call your lender and say, hey, I would like to do, I forgot the exact terminology it was. Uh, I think it's a temporary forbearance or something like that, or temporary defer your payments. You want to defer your payments, and they normally allow you to defer your payments for 3 months. Okay, now they may make you pay a little bit, maybe like 20% of your car note for that month. But once you make that amount, they'll normally defer your payments for 3 months. Now, the payments don't go away, okay? They're there, but they are delayed, and it won't hit your credit score and things like that. And it also will prevent them from repossessing the vehicle. So number one, call your lender, okay? And let me tell you, from my own experience being an entrepreneur, guys, as I was building my firm, I didn't have any loans. You guys are really lucky to get like the SBA loans and all of those things as you were midway building your companies. But when I started my company, I didn't have any help at all, right? So I basically had to sacrifice my personal financial resources to put back into my company. So I ended up using this 3 month deferment, right, to actually prevent me from losing my vehicle and having to take money home to cover my expenses. So during my journey of entrepreneurship, yes, my car has been repossessed, but I've also used the deferment to give me that gap in paying my car note as well. I'm not going to tell you what the car note amount was, but whatever it was, I was able to put it away and also take care of some expenses for my office, because when you're not coming from a rich household, you have to sacrifice to build your company, and the sacrifice comes from your personal finances, your lifestyle. So I had to sacrifice my personal household to keep my business afloat, and I used the deferment option as well to do that. So you guys can use the deferment option to prevent you from being repossessed, or if you know you're going to fall short or you've lost your job. Okay, you want to definitely consult with your whoever housed your loan. Another thing, guys, possibly refinancing. So if you know you've been paying on time, you have a decent credit score, maybe look into refinancing your auto loan as well. Possibly refinance it. See if you can take it to a credit union, get a lower interest rate. Remember, the lower your interest rate, the lower your payments. Depending on how good or bad your credit score is, you may have a prime or subprime loan. Okay, prime meaning you can get a loan from anywhere. Subprime means they have a difficult time because your credit is poor. They have a difficult time getting you a loan. So you guys may want to reach out to your credit union and see if they will allow you to refinance the vehicle and get a lower payment or see if your current lender have that option as well, so you can get a lower payment to prevent the foreclosure, but also so you guys can save. So I'm going to be very honest with you guys. Due to times being completely uncertain about things, I am also going to be implementing a lot of my own strategies just so I can just save up. Like, because I'm self-employed, nothing is guaranteed, right? And I don't like to just dwindle all of my savings. So I need to also come up with and utilize some of my strategies as well to save money and put some stuff away, because we don't know what's going to happen anytime soon, guys. Honestly, it's no way to predict. All of the countries in Africa are failing. It's just so much going on. Hold on, guys. Okay, let me go to this article. Okay, so this article, let me share my screen, guys. So this article is saying what caused the repossession. So, guys, it's a lot of things that's causing the repossessions. Let's see. What's causing the rise of repo cars in 2023? As we enter into 2023, the worrying trend that they're saying here is the new car. Okay, let me just stop and give you guys some context. This whole system, the whole U.S. economic system is kind of rigged. If you do not know anything, our stock market and our economic system is driven by consumer confidence. So you being confident in our banks and in our government and in the system drives our stock market up. It shows that we are stable. If you guys are thinking, oh my gosh, everything is going to crash, I don't trust the bankers, I don't trust this, I don't trust that, you guys start pulling money out because you're worried, then the stock market goes down. Crazy, right? Just off our perception. It's really supposed to be driven off the financial statements of each company. But since our dollar is not backed by gold or anything that's tangible, I personally don't think that the financial statements are really being utilized to monitor the stock prices. I really think it's solely now consumer confidence. Okay, I just wanted to give you guys that context so you guys can understand that the uncertainty lies in our perception. And that's crazy, but that's really what it is. Okay, so it says, as we enter 2023, a worrying trend, remember the key word, that's why I had to stop so we can see the key words that they're saying. Worrying trend has carried into the new year. That worrying trend is what? Car repossessions will rise. So if they're worried from what I just taught you, then what's going to happen? Okay. Families across America struggle financially due to an enduring economic financial crisis, job losses, and inflation. And yes, all of that is happening right now, guys. That's why I said it's a myriad of problems. We are in a sticky situation where not one thing will solve, not one solution will solve all of the problems we have. We have to independently assess our economics and separate each one and then evaluate the impact and then go from there. But it's just so deep. I don't think we will ever get stable again until we have a full reset. I'm going to be honest. Okay. It says the burden of livelihood weighs heavy on millions as they reassess their spending and work to secure stable incomes. Unfortunately, the financial hardship of countless Americans ripples outwards, trapping them in rising debt that can reverberate how and when they least expect it, such as struggling to afford their cars. The ripple effect from the current economic turbulence has spread across the entire nation, making its impact known in even the most unlikely places. Lower incomes, reduced job security, and disrupted salaries have created a complicated situation with increased auto loans default rates. The distribution tracks the course of relentless financial hardship. So basically, guys, they're saying that due to well, they're trying to say it's a ripple effect from COVID, right? But I have to be honest with you guys, and I'm going to stop sharing really quick. As an accountant, the ripple effect didn't start with COVID because many Americans didn't have a savings prior to COVID. Many Americans had a high amount of debt prior to COVID. Okay. So I don't believe that it was only driven from COVID. I feel as though it started prior to COVID. We were hoping that the moratoriums and the rent moratoriums and the government was going to do a little bit more. So we played a little bit, paid down something, did a little something, tried to start a little business, and then the money ended up being gone. And then you're like, holy cow, I still have bills to pay. I still haven't paid everything down. No more stimulus payments. My job didn't give me a pay raise. I'm not doing overtime. And so I think it started prior to COVID because this $1.5 trillion in credit card debt didn't just come out of the woodworks in 2022, guys. 2020, 2021. It didn't. This was accumulating. And I don't even feel like searching for the debt accumulator and all of that stuff right now, because that's not really today's show to really show you guys all of those. I did a live stream specific about the US debt. Okay. So you guys want to check that out if you want me to do a deep dive into what's happening. So guys, to be really honest with you, if you do your budget, and I know you guys hate it, the big word B, right? I'm gonna call her, yeah. If you guys do your budget, including all of your expenses and your habits, right? You'll really see where your money is going. And if you have enough, like I think a lot of you don't want to realize that you don't make enough money. Or you know it, but don't want to figure out an alternative to it, which may be first cutting back. Some of you may not be able to get your nails done all the time. Some of you may not be able to go to games and do sporting events. And honestly, guys, I had to sacrifice. It's not as bad as you think once you're comfortable in your own skin and know what goals you're trying to accomplish and can be honest about your financial state. Once you are who you are, exactly how I want you guys to be, you don't even really have to tell your friends that you don't have the money. You'll just say, oh no, I'm planning, I'm saving for right now, and they'll get it. You understand? Or no, I don't have it right now because I want to do something else. They'll get it. But a lot of you are still spending and not looking at your budget, and it's catching up with you. So we've been spending excessively. Honestly, when I think about it, since the Kardashians. Because even with me, I was triggered, not necessarily the Kardashians, but the social lifestyle. So I'm gonna say we've been literally as a system been overspending for about the course of the past 20 years. And we've been able to use credit cards to assist us. And so now we're here. Okay. Let me go to my notes, guys. Y'all know I always kind of go off script. Another issue that came to play is that now, and I briefly mentioned this in my intro, is that the car loans have increased beyond the student loan debt. I was totally surprised by that. But when I think about it, I had to take a step back. I'm not totally surprised. A lot of people are using their cars to make money. Okay. A lot of you guys, no tea, no shade. I know I'm going to have to say this, was encouraged to buy all of them vehicles for your business. And you know, you didn't even need the vehicle for your business, right? And so you did that. So you're part of one of some of those because they told you it was a tax write-off. And then you have some people that started side hustles or was doing the churro. And so, guys, with the increased repossession is a collective of the new influx churro renters, rentees. Yeah, rentees. Yeah. And then the business owners being encouraged to write off and get tax write-offs for auto loans. Okay. Then a lot of people are now using their vehicles to make money. So now I see why there were more auto loans this year, last year, than it was in the previous years. And now I see why it's going to be a lot of foreclosures. I just saw a post on social media where a lady was like, a lot of service providers are going back to work and getting 9-to-5s. And I'm not surprised because you guys are not doing the budget. You guys are not doing the budget. I don't care how much money, and people used to ridicule me when I say this. I don't care how much money you guys are bringing in. You still need to do a budget. You still need to do a budget, guys. It's no way around it. And honestly, you want to be in control over your finances. Like I know not to the penny, but I know to the dollar how much my bills are every month. I know to the dollar how much my payroll is every month. And you guys are supposed to be the same. It's not a nerdy thing, guys. It's a financially smart thing. It's the adult thing. It's not a nerdy thing because I get, oh, your accountants are smart. You guys are nerdy. You guys like math. You guys like numbers. It doesn't matter, but it's the adult thing to do, guys, is to have your budget monthly and then allow you to be in control before. So like when people borrow money from me, I will tell them, hey, I need my money back by this day, 2 months, or, and I know in my mind, I will need it because I already planned 3 months in advance. And so you guys can do the same thing. All of this is doing is budgeting and then planning when you're going to do your trips, knowing when you're going to get your hair done, knowing when you're going to get your nails done. That's just being an organized person. Let's really be honest. That's just being really an organized person, guys. Alrighty. So the reason why the reason why the car loans amount, the total amount of debt is higher than the student loan amounts is because one, the interest rates, and then also it seems like it's just so easy to get car loans nowadays. It's like it's no regulation involved with it. Just like back in the day when they encouraged us to get student loans, it was like no regulation for it. Okay. So for the first time since 2010, auto loan debt has outpaced student loan debt. According to the Federal Reserve Bank of New York, experts say that the reversal is primarily due to the federal government. Listen, they said primarily due to the federal government pausing entrance accrual on federal student loans and the blistering rate at which vehicle prices increased in 2021. So I can agree with them pausing the student loans, because then that means we didn't have to pay our payments. But I remember a lot of my clients were still making their payments as well. A lot of people were still making their payments. With persistent high inflation, more Americans are defaulting on their auto loans payments. According to Experian, 30-day delinquencies increased to 2.72% in the second quarter of 2023, surpassing the COVID levels. Why does this matter? As the federal student loan program resumed, October was the first payment, guys. Interest rates remain high. Consumers may find it increasingly difficult to keep up with your auto loan payments because now you're having to pay everything. So if you are also paying student loans, don't forget to contact them and go online and see if you can qualify for a different type of repayment option. So they have like 4 to 5 different type of payment options that each and every one of you might qualify for. Okay. And so sometimes, guys, you have to pay the minimum amount to stay afloat. Sometimes you may have to find programs. Some of you may now need to start looking for grants that fit your lifestyle. So if it's like a grant for single moms, or grants for startup businesses, or grants, like this may be the time for you guys to get extremely creative with figuring out ways to make ends meet while all of what we're not in control over, this war and government and everything else, while they get all of this settled, we're trying to still make money and stay afloat, guys. So that's basically all I have for you guys for this student loan, auto loan issues that we're facing right now, guys. Do your budget, contact your lenders, guys, and make sure that you don't just run. Call them. They know, and they might be a little feisty too, but don't let them get you worked up. We don't have time for them. Just call them and figure out what programs they have from you. And every lender is different, okay? So your girlfriend lender might say something else. That don't mean you shouldn't try your lender, okay? Okay, perfect. Thank you. All right, guys, so I'm about to switch. I'm going to take a quick little break, and then we about to dive into this British William thing. So you guys might as well grab your libation. I think I'm going to have to go to the bathroom on this one because, guys, I ended up finding her original indictment before she was on Love and Hip Hop. Oh, no, before she was on Basketball Wives. I found the original indictment showing the tax return years that she defrauded, the Social Security numbers, and the programs and everything that she ended up defrauding, guys. So we're about to deep dive into that. And I'm going to teach you guys how, from what they're saying, the mind frame from my perspective, being an IRS enrolled agent, what an IRS agent may look for, maybe how the audit came up, where did it originate from, and all sorts of stuff, guys. So what I'm going to do, I'm going to take me a quick little break, guys. We about to dive into this British William thing, and I'll be right back.